This week's markets have been quite weak. We saw one of the biggest monthly falls in the beginning of September, and it was somewhat coincidental with Nvidia's stellar earnings announcement last week, despite the company's poor stock performance. I believe that talking about Nvidia would be a good place to start, and I'd be interested in knowing your thoughts on the quarter, as well as how it performed in comparison to your expectations. Indeed, Tom, I believe that was the most expected earnings report we've seen in a good 10 years or more. Just eliminate the noise in terms of numbers and events when it comes to watch parties and other Nvidia-related matters. The Blackwell delay is no longer an issue. Consider all the excitement surrounding AI in the past few months. That matches what we're observing in our tracks over the course of demand. We estimate that the ratio of supply to demand is 1.25 to 1, and nothing in the data or measures we looked at led me to conclude that this is changing. Look, they received $32.5 billion, which is little less than the whisper expectations of $33 billion to $33.5 billion for the quarter. The stock experiences a decline. Given that we are examining 2 billion beats, we assume that this is most likely the case. However, there's no way Jensen and the group will lead to anything close to that, especially in a quarter like as Blackwell's. You leave with the impression, I believe, that the demand thesis is strengthening, that yields are getting better, and that, in the end, it prepares us for the next part of the narrative. Now see, I understand that when sell-offs occur, some may ask themselves, is this it? Is this concluded? In terms of AI overall, this is the second inning of a 9-inning game. If anyone learns anything from this call, it should be that the rest of technology is multiplied by 8 to 10 for every dollar spent on an Nvidia chip. That is the most significant factor, in my opinion, Tom, because Nvidia's revolution and the contributions of semiconductors, software, infrastructure, and the Magnificent Seven are what are driving this market higher. It is identical to what the hyperscale players demonstrated. Indeed, and precisely. I believe, and I have heard you assert this as well, that you really believe that the story of Nvidia and AI in general is just getting started. I'll offer you some figures. Compared to 4 or 5 months ago, the number of use cases we are following from an AI standpoint has increased 7-fold. The takeaway is that use cases and ROI are the most important factors. That relates to the main question of whether businesses will keep spending money. Though it seems like a two-edged sword, it's not. We can see it in Asia, where demand is still rising. You might argue that the current valuation is pricey, but I will continue to see it in terms of where the numbers go over the next 2 or 3 years, and as we look ahead to the next 6 to 9 months. I think Nvidia is lucky a market cap. That speaks to more general tech trends and is kind of our opinion. Yes, you are correct. Nvidia has seen these pullbacks in the past, during which the stock has, of course, made a parabolic run and has kind of caught up with or consolidated its recent gains. Do you believe that the stock is currently consolidating and will rise in response to the next significant catalyst, like we are seeing in previous periods? Yes, that is sort of our perspective. As additional researchers examine not only the October quarter, but also the demand trajectory over the next 6 to 9 months, and considering the developments surrounding yields and Blackwell, we believe that order flow might ultimately reach the tens of billions. You begin to examine a stock that I consider to be reasonably priced, because I don't tend to see a name and think, oh, it's gone from X to Y. That's crazy. However, observe the figures. In other words, your earning power was essentially 170 cents, and now it will be between $5 and $6. Therefore, it also depends on the numbers. It's also similar to piecing together a puzzle. Take a look at what Jensen is discussing. Take a look at what Nvidia, Amazon, and Google are talking about among hyperscalers. Take a look at the incredible growth in the semiconductor industry that we have witnessed in Asia over the past 30 years. Next, you examine use cases, Palantir, ServiceNow, Oracle, etc. This is just the start. Though it's not a straight line, this is the start of $1 trillion worth of AI capital. I would like to draw attention to one particular point that institutional investors frequently make. They will say, look at Cisco's chart in the late 90s, and then they will compare it to Nvidia's current chart. It is comparable. I cover tech in a comparable manner. Tom, you were also covering tech back then. See, at the time, 90% of Cisco's clientele consisted primarily of startups with deficient, upside-down business models. Many of those businesses have since closed. Who are the consumers of today? I mean, some of the largest 8 businesses have cash on hand of over $1 trillion. Next, consider the events from an enterprise standpoint with regard to the source of these funds. Simply put, I don't think it's appropriate to merely throw up a chart. I get the story, but in terms of a tech bubble, this is a 1995 or 1996 moment rather than a 1999 event. It's a really good point. That's a crucial point after all. Cisco wasn't selling chips for $100,000 to $120,000 either. I took it that they were selling devices for considerably less money. And consider the users. Those users have vanished. Yes, and you even addressed the risk of concentration after that. Oh, Nvidia, Microsoft, 44%, you think. Since Microsoft acts as a hyperscaler and middleman for the thousands of businesses who ultimately purchase the chips, it is not the company that bears the concentration risk. In that regard, it is not Microsoft. That's not like there's a risk of concentration. I'm just saying that it seems like you're about to leave, and the DOJ, of course, is going to do it exactly on time, like in a crappy Netflix series or something. Even if it seems like it didn't even happen, the story kind of blurs after that day. However, we are currently in one of those phases. Nvidia has previously experienced these drawdowns where the stock has essentially stabilized or caught up with its recent gains. Naturally, it then makes a parabolic move. Do you believe that the stock is now consolidating and will rise in response to the next significant catalyst? Yes, that is our perspective. As additional researchers examine not only the October quarter, but also the demand trajectory over the next 6 to 9 months, and considering the developments surrounding yields in Blackwell, we believe that order flow might ultimately reach the tens of billions. You begin to examine a stock that I consider to be reasonably priced, because I don't tend to look at a name and go, oh, it's gone from X to Y. That's crazy. However, observe the figures. You essentially had an earnings power of $1.70, and now you will have $5 to $6. Therefore, it also depends on the numbers. It's also similar to piecing together a puzzle. Take a look at what Jensen is discussing. Take a look at what Nadella, Amazon, and Google are talking about among hyperscalers. Take a look at the incredible growth in the semiconductor industry that we have witnessed in Asia over the past 30 years. Next, you examine use cases such as Oracle, ServiceNow, and Palantir. This is just the start. Though it's not a straight line, this is the start of $1 trillion worth of AI capital. Tell me if you require any more changes or improvements for cybersecure, and obviously for Crouch. I think George would say the same thing. But it was a bad software update that basically we will talk about for years, and I think will probably change the way software updates happen. And I think that's why it was so bad, for CrowdStrike. I think what's shocking in a good way is look, as soon as that happened, over the next week, Conan, we're talking to customers integrator disruption, trying to understand our C is going to switch what happens to sales cycles, about it was really 3-4% of sales cycles got disrupted. You look at the quarter for CrowdStrike, much better than anyone could have thought if you go back 2-3 months earlier.